Good morning, good afternoon, good evening, or good night. My name is Melvin, and welcome to episode 5, I believe, of my crypto adventures. So basically, I've been talking a lot about my indicators, and I still have a couple to go because it's just a lot to go about. You still have to, of course, figure them out yourself. I've done a little bit of research on the last one that I also want to show, but before we do this, I want to show you I now got an option to just click here, back in a minute, and yeah, of course I can also mute my microphone, which is very handy. And the same thing if something just comes up or I just don't want you to see me, for example, using this website, I don't know, then I can just blur my screen for that and not have any problems. Anyways, and that way I actually want to make this like a video without any cuts, so I can just do everything like it is, like a live stream, but not having to go live necessarily, even though I want to be able to go live one time. But that way I can keep it a series, give it a little bit of a twist in in how it's spelled up, and I don't have to really, I don't really have to be afraid to just give myself a minute or two, because it's in a live stream style. You can just watch it back and you know whenever I'm away, so that's very nice. And you can just skip that, of course. So yeah, that's basically a new update on that. Anyways, I wanted to talk about some other indicators, and well, one of them is actually pretty easy, but not really at the same time, which is, and I already clicked it away, I don't know why. I have to be here. The least squares moving average. Well, I don't use myself because I haven't really looked at it exactly how it works, but I know how it works. I just haven't really seen it in action a lot. Anyways, it's just kind of similar like the simple moving average or the exponential moving average, which is basically a moving average, as I like saying 1,000 times. And it just averages a little bit out what happens and has a little bit of delay, of course, but can give you confirmation on what it does, on how the trend goes, and it can also be seen as a support. And the exponential moving average does quite similar stuff. I mean, I got them here as well. These are a lot of things, so I'm just gonna click this away. Maybe it works now. Oh, it doesn't work together with the least squares moving average, I believe. So then I can try it again. Yeah, these are my longer moving averages. As you can see, we're now at the point that the short term is now under the graph, for example, and this gives me a little bit of a support. And the longer one is also catching up, which usually is a sign that it is a little bit bullish, which is if they're both being seen as a support, but mainly the big one is coming up as a support as well. Then it's on the short term it has gone down a little bit, but on the long term it is quite a bullish signal. And it can also break through, of course, and then you have to look at it in another way, of course, and everyone uses different periods. But yeah, that's the exponential moving average and simple moving average in a short note. But yeah, putting this away and pulling this up again. The least squares moving average just calculates their moving average a little bit differently, because apart from actually using the average, it also calculates the slope of which it has to go. And then, for example, if you would average over this part, it would calculate literally the slope of that little piece in like a regression line, and then it will basically extrapolate the next candle. So if you would have like these 5 or something, or these 10, you have an average of a slope like this, then the next one would of course be having a value over here. So then it goes that way, but of course the next one uses 10 different candles, which will make the slope differently, and that's why it's not really a very smooth line. It sometimes just has turns and twists like you can have here. It just goes up all of a sudden. Because it's on 25 candles, it actually does this for 25 candles. It calculates the slope and then extrapolates it for the next value. And that is just has just a little bit of a different different calculation, which just gives a little bit of a shorter action on trends, But it could also, if there's an outlier, for example, this might be a little bit of an outlier, that it went up and then goes down again in, well, a day or so. This could be an outlier, and it now sees it as a positive trend. But it broke through again, so that's a little bit annoying. So it reacts pretty fast because of that, because it also gives a lot of weight on the last ones, I believe. So it basically grabs the variance between, well, they give, like, okay, for the nerds between us, it's gonna be basically what this website says. It is the basically, if you have like 10 candles, then you would number them 1 to 10, and then you would basically sum over all those values. So you get a sum from 1 to 10, which is 1 plus 2 plus 3 plus 4 plus until 10. And the values, or the Y values, are the closing prices, basically. So they grab the closing price and they also sum those. And then you can have like the sum of these two combined. So it's, for example, 1 times that closing price times 2 times that closing price, blah, blah, blah. And they do, basically, they look at the variance of that between the X and the Y. And they also divide by the standard deviation of the values, I would believe. They say the X, which is basically the X values, the period number, I would say. That sounds weird. But then, because the last ones were more weighted, then they put another weight on this, so it kind of averages out. I don't know, it's a little bit of weird calculation, but I would certainly get it that that's the way how you get your slope, because this is the number for the slope, which is basically just averaging over the you will make a slope out of it, basically. So I get what they're doing. This is basically the difference between every one of them, and then basically for between every one of them, and that average or something. I have to get more in detail about that to really get it. But you can use this one. I don't like this a lot, because EMA SMA is a good combination, and I'm not using that. Another one which I'm not using anymore, I was before, are the Bollinger Bands. And the Bollinger Bands are way easier. Actually, I'm finding this all under technicals and indicators if you haven't seen. Bollinger Bands is also a little bit of a statistical property which they're using. So I just use, like, if you have a slope or a trend in some way, then basically you can extrapolate it and use that as an actual moving average. Bollinger Bands is the use of the property of a standard deviation, which is, for example, you see it go up here. Well, this is just a simple moving average, actually. So it's just the average over the last 10, and that's the value of that. But then you also have a standard deviation with that, and that is a little bit weighted and skewed in some ways. And what I mean with that is that it's not as wide on both sides. Well, it does look like it right now. It does look wide, about as wide on both sides. It does. So it might be an optical illusion, but sometimes, for example, at these kind of moments, it does feel like this distance is bigger than the other. I'm really confused right now. I really have to figure it out, because I have a feeling that in these kinds of circumstances that it's more skewed, actually. So, because it's still rising over here. I don't know. It's hard to see, actually. Might even be just 1-to-1, which is normal for a normal standard deviation, which is basically, actually this is 2 standard deviations, so which basically keeps in mind is, you have this curve, this bell curve. I like to use a little bit of graphics for explaining, and I should now be able to do this more often. So, okay, so I think this picture is the best picture that I can show. This one. Can I open this in a new tab? Yeah, there we go. So basically, what's very nice about this is that a standard deviation is basically, these are the standard deviation. I don't know why it's in 10s and 20s. It's just one standard deviation. And one standard deviation on both sides basically encapsulates about 68% of all possibilities. So basically, if you have an average, then you have some outliers on both sides, and well, of course, if you only have 10 and you average over 10, then this is not, of course, an exact bell curve, but it approaches it. If you do it a lot more times, which is basically also taking the average of a lot more numbers, you would get this. And basically, you can see this as a possibility that, for example, if you have a value, for example, here of, I would say about an average of 1,000 euros or something, or 100 euros, for example, for Solana. It could also an average over 10, 100 Solana. It could also have, for example, a standard deviation of like $2, which means it also has like a very big possibility that it actually lies about above, for example, $102 or below a $98. Because only 68% is encapsulated in this, and the other 32 is outside here. So basically, two standard deviations means, well, basically this whole section. And this whole section is basically all these percentages combined, which is the amount of, I would call it possibility space, which is in here. It's a little bit of math again, but basically only 5% lies outside this curve. So it has only 5% chance of falling outside this curve, which means it's not that probable. Now, of course, probability, you cannot really use it as that, I believe, in marks like this, but for example, it happens here as well. But yeah, in general, what it means is it is very high from the average. It's very far from the average, which means it's either overinflated or underinflated. If it's not close to the average, then it's just outside of what you would see as a normal price for now. Because you can see the market as a sort of a it's you can see it as also an average. If you go from, I have now 4 hours, but you can also go to a day, and then you only get to see a way different moving average, which is basically the market. You can see it as a market price, for example. It's very possible, it's very logical that the price would be about 108 in like a day or two, maybe 109 in a day or two, if you would follow that trend from that point on. But if you go, for example, to the 4 hours, in 2 days, that's like 1, 2, 3, 4, 5, 6. Yeah, okay. In this trend, it's also the same, actually. But if it goes like this, well, then it's totally skewed, of course. That has lower probability, so it might be overinflated over here. And then you can also see, like, if it falls outside of it, it also like to return pretty quickly again. And this happens a lot. For example, over here, it touched actually the Bollinger Band, which means that, well, it's getting outside that 2 standard deviations, which is usually that it's undersold over here, because you usually want to go around the average. So people, like to buy, and as you can see over here, we actually made a jump of like $4. And I'm not really trading with the Bollinger Bands. I might do that more often, because I'm now looking at it. Looks pretty good for a 4-hour candle period of 20. Does look pretty appealing to use, because I'm getting a signal over here. This is also a pretty good signal, not only because you can also see that the standard deviation decreases, because it's getting very tight over here. And that means basically that volatility is decreasing, which is a very good thing that you need to know. When volatility decreases, it usually wants to explode out again. So you get like, it decreases over here, and now boom, it becomes very big again. As I already said, with like the channels, maybe, or usually mostly the wedges, those are a very good indicator of. Now, for example, now you can see here it actually exploded upwards, like a lot actually. Maybe it's hard to see, but here again, it actually, it went from extreme standard deviation of here. This doesn't look like an enormously big standard deviation, but you have to grab them vertically, which is super wide. That's why it's also super hard sometimes to see if it is wide. But yeah, it's super wide over here. And then actually, yeah, of course, it got way slimmer. Then you can see how slim it is. It's only this, like a difference of like $6 here, and here it's a difference of 103 and 77. It's like $30. So this is way more stable. Then it wants to go upwards. As you can see, it's actually going outside of the Bollinger Bands here, which makes it very unstable. And you actually can see this drop all the way to 85 at around, yeah, January 2nd. I'm very happy that I wasn't in there before. That was a big drop in a very short amount of time. And that's basically trying to liquidate every asset that someone has. Because a lot of people have like a take profit or a stop loss or something. I don't know if they have any of them over here, for example, just outside the Bollinger Bands, which is usually then, if they would use this as an indicator, yeah, then everyone gets liquidated, of course. Everyone's things get sold, or they just lose their profits because they went like from, if they got in here and they hoped for that little rise, they just lost their positions, which is super annoying to happen, by the way. If you're that kind of guy that has like a lot of money and wants to liquidate everyone's everyone's position, fuck you. I get that you are making a lot of money with that, but that's just a filthy way of doing it, I feel like. And I also don't know who has a lot of money to actually have this much of an impact. But a lot of people are doing that. They're like, oh, I got a short right now because there's this big sort of pump and dump, or just in a different way. This is more like a stable crypto, actually. So, but yeah, those are the Bollinger Bands. Yeah, let's get rid of that because I don't use the Bollinger Bands. And I just used just use these. And actually, I wanted to also point out that, yeah, I'm also using this for my own trading, of course. So I'm actually trading in Solana only right now. That's why I'm only going over Solana a lot, because I'm actively trading in it. So I think, yeah, I have to start actually putting in my my buys and sells in here. I don't know if I can sync them up with my crypto exchange. That would be awesome. I have to figure out that still. But I think I bought somewhere, I don't know, somewhere over, was it this long ago? I don't know. I think it was somewhere over here. I think I actually bought something over here, like at the 94 range, which was very nice. Or maybe 90, no, I think it was 99. Yeah, I bought something at the 99 range over here, and then went up a little bit. Then it went down, actually, a lot for my doing. Then it went up again, and then I bought again at 101. And then I made profit because I went all the way up until 112 over here. And I did 112. Because first it was, I believe, no, I actually put it at 112. Because I was believing that 116 was going to be it, I believe. Because it was actually, yeah, I know what happened. So it went up and I didn't have a take profit or a stop loss, which is usually weird that I didn't do that. But I actually, it surpassed this this thing. It went all the way over here. I believe, or something like this. Yeah, no, it went over, and I was just at the time that I was like, oh wow, it's going actually pretty far up there, and it actually surpassed this point, like 106 to 100, yeah, just the beginning of 107. So why not like buy, no, not buy, but why not like put it on 112, because I believe it's gonna go to 117. I believe that was the time when I put the stop loss, and then at first it didn't hit it, even because I set it at 112 and it was over here, and then after a couple days, and then back up, and then I got it. So then I made this, so I made a profit of like 10%, 12% maybe even. Oh, I'm moving stuff, which is super, super nice. And then I waited for a little bit, because my goal is having this 5% per month. So I was very happy with taking the 10% there. But I'm still keeping an eye, of course, on the graph, because maybe I can see another way in to get a little bit of a little bit percentages, or very low, how to call it, very low risk trade. And actually I saw it going from 117 all the way down in a pretty short time. I believe like a week or something. So this is like, yeah, this is 14th and this is 21. Okay, so 21st of February. So it's yeah, basically 1 week, and it went down from 117 almost down to yeah, not down to 100 again. And then I saw it dip down a little bit again, but I actually got in over here, I believe, at the 100. I believe I got in here, which is an amazing time to get in. And actually, then I did set, I believe, when it was at around 104, because that gave me more or less better indication, and I couldn't get liquidated because, well, if I already said if it's something like that happens, I hate when that happens. So I don't put my take profit or stop loss immediately. Um, because usually these points are points where that would happen, like it would like liquidate everyone. So I usually just want to wait, and if it stays in this, yeah, of course, then I'll wait until we'll, well, of course, hit this again. So I'll just take a small amount of loss. That's a little bit what I usually do. I just like when it drops down like very rapidly, I would just wait for it to go almost back up or completely back up, because usually when it goes down very quickly, it wants to go up very quickly, so it can go to around there. And I keep an eye on it, and usually, if I already got the 10%, for example, I know that this market is kind of growing on the long term. So, for example, if I grab the day again, and then the simple moving average, exponential moving average thing, it's still going up. It's still going up, and it's still using this as a support, which is a very good thing. And that's for me more or less a long term signal, which I'm using. I'm also using the MACD here, which you can also see that it already reached another top over there, which is very nice and can be used actually in your advantage. Also looking at volume, I believe, because the volume, the volume was already there. Volume is still decreasing, but this is still going up, which is usually a good thing. You can actually see I don't want to really draw it in. I don't know if I already drew it in. Yeah, this wedge is actually real. That sounds weird, but I mean like this wedge, I might even do it like this because it might be even more accurate. Like this. Yeah, this looks even more accurate actually. So this wedge is actually here. I'm noticing that because it's being used as a support multiple times now. You have this a little bit stronger one that was a little bit of an intermediary one. Okay, so yeah, I think that's nice. So in the long term, it's still going up. It still hasn't broken down. And if it did, then I will just wait until it reaches a certain. For example, if it went up from there to there, and will probably go down to maybe around here, then it will go up again. Or as you can see right now, it's actually maybe breaking up again. Because it's been in a run, it can go out down. It's not weird if it would go down to 50 or something again, but because it's been a long run already. But it's getting, yeah, it's getting strong there, then less strong, actually way faster up, and then well, it's still this trend. Might even go more like that. But Solana's like doing fine, you know. So I keep an eye on it, of course, on how popular it is. Maybe some news articles. I'm reading some news articles here and there. So always keep an eye on everything, of course, because you have to be in front of the trend. You have to know what you're doing. Well, it sounds weird. You have to know what you're doing. You learn by doing. But yeah, keep an eye on like what does the news say? Is there any news coming up? Are there rumors to be sold? Which is a real thing. Like buy the rumor, sell the news. If you hear that every time, yeah, it is real. I've had it with Ripple actually that I've been scammed because I bought the news sort of. So I actually bought the rumor a little bit before, like 2 weeks. The news was everyone has to buy Ripple at February 1st. So everyone, of course, got in before February 1st, and everyone sold on February 1st. And actually, I didn't, because I didn't know that this was a thing. So I lost a lot of money, but luckily I didn't sell my position. I just waited it until it like got back up again, and actually only made like 20%. No, not even. I think only like 10%. I lost, or even I went on with Ripple when it got back down again and actually made money again. So I used the volatility of it again to redeem myself, basically. But I was very lucky as well, I must say. So yeah, it was insane. And I don't want to have that happen ever again. So I need to know the news, or else I might be in trying to trade something, and then the rumor is that something happens, and then bam, it goes down to 50 again or something, which I don't want. I hope that that's not the case at Solana. I'm sorry. Anyways, um, those were basically all the indicators that I wanted to show. What I now wanted to show is actually okay. So what I can do is now grab this one again. What I can actually show is this, which is how to actually choose your coins or choose your assets which you want to invest in. And actually, I really like CoinGecko. I don't use it often because in my mind, I just always have to go to CoinMarketCap, which is also something similar. It's just basically the news, and it is everything. Yeah, it has a really nice grid like this, which is also now on here, of course. But I worked on this before, and I know that if you go, basically it's like a site where you have all the information on a lot of coins. They're ranked by their market capitalization, which is, I believe, basically the total amount of liquidity in the yeah, what is it? Total market value of a cryptocurrency circulating supply. It is analogous to the free float capitalization in the stock market. Yeah, so basically the amount of Bitcoin that are there, yeah, times the current price of the coin, which is basically completely dependent on what people think it is worth. So if there's not a lot and people find a lot of value in Bitcoin, then it goes up. It's just supply and demand. So it's very, very easily very high. As you can see, it's 1 trillion, which is insane. $1 trillion is so much money. That's the total circulating supply. Anyways, here you have the same thing basically. But I figured that I like this one more. I want to go over it. I might even compare the two, but I like this one because it has this very nice highlight, which you can also turn off if you find it annoying. But you can see the total market capitalization in crypto, which is actually double the amount of Bitcoin, even more than double, which is actually a good thing to know, that there's more money in altcoins in general, in total, than there is in Bitcoin only, which is a very, very good thing because you have like Tether USDT, USDC, you have all these, you call them stable coins, which are basically analogous to, well, it's always exactly $1, for example. So these are stable coins, which are very nice. And these stable coins are basically the gap between trading normally and trading in decentralized finance, which is basically a bank where you would trade on, or and then a broker where you would trade on, but without the amounts of fees, because they use smart contracts with these stable coins. And these stable coins have an extremely small fee, because the only way of feeing in this one is because there's no mining as you have in Bitcoin, for example. You have proof of work, which is basically you put your money in the USD Tether, keep that as basically liquidity for other people to use. And because you have that money in there, people can like loan a little bit here and there, and you get a little bit of money for that, for keeping it. And the people who trade with it actually have to pay for a little bit. And because you keep it, you also provide, I believe, some way for the people who are actually making the transaction. Well, I believe it's on the cloud even. You're making free servers or something like that. I don't know exactly how it works. You have to read the paper for it, but the stable coins are always going to be the same price as the actual fiat at the time, of course. So it's always going to be $1, and it might change a little bit, but that's because it has to update every once in a while, of course. Yeah. So yeah, it gives you an overview of everything. It also has trending. I also have volume of everything together, which is also very interesting because that can also change a lot. Like news can say something, for example, about a certain coin, which will, for example, Bitcoin. Oh, Bitcoin has already passed the 55,000. If that news from a very big company goes around, then you can see actually like this spike. Oh my God, what happened over there? God, that's a big spike. 24 hours. Oh, it's actually, I cannot find that spike anymore. Oh well, it's probably yeah, it's 24 hour. Anyways, you also have trending, which is very interesting because trending coins are, I believe, the most searched for in the last 3 hours, which is very interesting. For example, now you have Pepe. Everyone has been googling Pepe because it's making in the last 24 hours. Actually, this is a weird way of writing stuff. Why is it so small? Why is that 5 so small? Oh, they actually mean it as in like it's only 28.59. How much is that? That's milli microcents. I don't know. How do you say this even? I don't know. Anyways, it's a shit coin, of course. And you can see how much it actually went up in like the last month, which is insane. It went from that, which is like a volume of 165, to now a volume of over 1 billion, which is insane. Pepe's old Telegram group has been removed due to breach. So basically, they have like the pump and dump in here. It's insane. You can see. Actually, can maybe try to short this one because it's so high up now. But you have to wait for a reversal sign. But if you have these kinds of coins, you're shorting, so you're not buying the pump. You're actually shorting the dump, which is a very nice way of making a lot of money in a very short time. But please be very, 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 very careful because that's the most insane thing you can do. You can do this with margin trading actually, because you have isolated margin, which basically is like a very small wallet for that particular how do you call it? Trading. How do you call that? Yeah, you basically have a market for that particular market, for that particular stock, you can say. But for that particular market, for example, it's Bitcoin USD Tether. And you really are certain of, well, but basically, if it's, for example, if you take Pepe USD Tether, and you wanna sell that, but you know it's gonna be like 20% down or something. For example, from there to, no, this is in 7 days maybe. But yeah, from there to there is gonna be like I don't know. Yeah, it's actually a pretty broken this. Because here it was 20. Oh my god, what am I doing? I'm so confused. Anyways, this is pretty broken. Just look at Training View for more in-depth analysis on this. But actually, like, what was I saying? I'm completely lost. Oh my god. I was saying that you have to really be careful. Oh yeah. Because this goes very up and down. Oh yeah, that was it. So isolated margin, you can actually put a little bit of money in there, and margin is basically leveraging your token. So for example, if you have like $50 in there, then you can do it times 10, which basically means that whenever you use 100% of your money in the isolate margin, which is the $50, you can basically loan 9. If you have times 10, you basically loan times 9 your money, so you have like 10 times the amount that you had in the beginning. Then you can make your trades, but basically what you do is, for example, if you make 10% profit with your $500 now, which was $50 before margin, you basically earn $50, which is actually 100%, which is actually a 10 times increase in the amount of percentages of profit you're making. And this is, of course, very, very dangerous, because when it goes 10% down, you're basically having 100% loss. And that's when it liquidates, which is basically, if you have a 10 times margin and it goes down 10%, when you buy it, of course. If you sell it, it's actually a good thing. But yeah, when you have 10% loss on 10 times margin, you liquidate your position, you lost your $50, but not in anything else, because it is isolated margin and not cross margin. Cross margin, you can actually have multiple coins in cross margin and then have them all. Basically, you can then, for example, have 50% on one coin and then 50% on the other one, and basically when one is dying, they will just grab the rest of the money from the other coins, if you'd like that. So in that way, basically, you're still doing more than 10%. You can have more than 10% losses, but I'm not really fond of that. A lot of people use it. I don't. Isolated margin and use it, for example, on a times 20. If you think it's gonna go down at least 10%, then you at least can make. If you know if it goes down 10%, you use times 20. You can have like 5% of these 10%, and that can be your complete. Then you have it times 20, which is basically 100% profit, because if you know that it goes down, you can short it, and then it basically works the same as buying. Basically, you're loaning Pepe, for example. Now you're loaning Pepe, and you're selling that for a certain price, and then you wait until it's like 10% lower, and then you buy it again. And you can choose, of course, when you want to do this. But if it goes up, then basically you have to rebuy them at a higher price, which is more expensive, and you don't have that money. So again, if it then goes up 10%, then you actually liquidate it. Or sorry, if you go up 5%, then you liquidate it and you lose your, for example, $50 that you put in there. So that's a way of doing it. It can really, if you have like €1,000 or $1,000 and you only put in a $50, you only can lose at most 5% of what you have, which is really nice. But you really have to watch out, because it's way more volatile, and you can be wrong way more times than you actually are with normal trading. Only do this when you're absolutely sure that something's gonna happen. For example, it's now been in one day, it's gone up 54.4%. That's insane. That's a lot. In a month, it actually had way more gone up, and actually you can see how it went up from like what was it, 185 dollar satoshis, I would call them. What's this? How do you say this? Okay, so cent, then you have millicent, so this is 192 microcents, I believe. Yeah, I believe it's 192 microcents, which is weird to say. And this is 285 microcents, which is basically, yeah, that's like the 55% increase. That's insane. But you also know that at one time it has to go down, but it's super volatile. For example, this is 285, and this is already 279, and 5% is basically 14 or something down. 14 down is from 285. It's 271, which is like over there, which is like how much is this? Is like an hour or something. How much is this? Wait, it's 1:30 and this is 3:41. So it's basically 2.5 hours, and you can be, you lost all your money. So don't do, for example, in this way, don't do the times 20 margin. Do it like times 5, which is a lot in this sense, but you can have more stable coins. And if you are sure for something, for example, if you're sure that Solana is going to go up, for example, like 7% in a couple days, you can put it in times 3. And you have more money. But it's basically, you have to watch out that you don't do it with all your money, because it will have a great effect. You can, for example, do it with a third of your money if you have it times 3. To completely be sure that the other 2/3 are safe, that everything that can happen, you can even, if you really like, you can actually do margin trading only. And if you know, like, hey, I have 430 euros, and I'm going for that 5% increase per month, you could also just grab, what would it be? Like 10% of your money. For example, if you have 1,000 euros, you grab 100, and you went at 5% in total, so you have to go for the 50% on margin. So you can just basically grab it, do your normal trading, but then on 10 times, which is basically loaning the amount that you have, but then, but then when it goes down, you just lose 100. So it's basically an automated stop loss in some sense. It's, it's whatever you'd like. I'd use this on this because this is way too unstable for me to just do it without. But it can give you, it's basically a little bit of gambling. But if you know if you know how to make the right calls. For example, now it actually looks like an upwards wedge, going very strong, maybe once again up or down again in a very short amount of time. Um, so you could go for that and just grab like 3%, but then times 10, so you have a 30% on like $50, which is like 15 euros in, for example, half an hour or something. This is really short trading. Um, but yeah, going back, this was a long tangent. I'm sorry, and that's why I also said this is gonna be more like a live stream ish kind of video. If you go back, you have like the Bitcoin, Ethereum, Tether, and you also have Solana. So the nice thing about this, and that's I didn't even go into the depth of CoinGecko. I just went on like shitcoins and stuff. I'm sorry. What I also very like is that you have markets here. You have the latest news about price dynamics, market outlook, on all different kinds of journals. Now you have guides and what it means and how it works and that kind of stuff, and different articles and where they're mentioned. There are global prices to convert them if you want to. Um, this is super extensive. So you have related coins. So Chainlink is, I guess, related in some way. People who basically how to find like related is you look at your coin and you look at the people who looked up your coin, and then you also look at the people who look up different coins. So you get basically similar kinds of ideas. And you have also trending coins of sort. They're always at the bottom. Those are basically all kinds of different coins that are just in everyone's starknet. Sounds very cool, for example. These are all kinds of things that, for example, you can swap with, or they're just like they now have like some very cool, not staking, but like airdropping or something. How do you call it? I forgot the name. But also, what's very nice is information. For example, you have the website of them. You have the source code. You have categories, which is smart contract platform, FTX holdings, multi-coin capital, and proof of stake, which you can all, like, if you know these terms and you know what they mean, then you can really find coins with the same categories to find stuff that you might like to invest in. And maybe get yourself a portfolio of these kind of things because you believe in the idea. So you can also just go on that kind of route instead of just stupid selling and buying the whole time, but actually investing as well in the idea. Because what I also like is that you have a lot of news. As I already said, it has a lot of news, similar coins, historical data, that kind of stuff, which can help you find actually coins that you also believe in are going to go up on the long term, so that you know that you at least have this a little bit of, well, if you would do nothing with it and you just hold them, that you would also just get money, for example, just by doing nothing. But now I'm actively trading, so I'm getting more percentages. But if I would just keep it in there, for example, I believe that it can go up to like $150 or something, or maybe $200. I believe in that. Definitely. I'm not sure of it. So that's why I'm also keeping an eye on it, and I'm also just trading in it. But I definitely think that it can go up into the 200s because, yeah, it just has a lot of potential. I hear a lot of good things about it in the news, which also makes me believe in the ecosystem. And yeah, that way you can also look at different coins. For example, I haven't really looked into, well, actually the one under Solana, which is actually staked Ether, which is something else. Again, I've never heard of that before, to be honest. Let me see on the max. It's already pretty old. Lido staked Ether. So basically, it says decentralized finance again, which is pretty new. Well, it's not pretty new. It's actually, I believe, from like 2020 or 2021. ETH 2.0 staking. So what that basic? This is very nice to know. This is one of these coins. You have like this idea of liquid staking, which is basically if you put your money into Ethereum, you can stake it basically, which is basically holding it, and just because you're staking it, people can use it for liquidity, and because you're like always making, you're always providing for people to buy your coin, and sell it and use it for borrowing or lending or whatever you want to call it. then you actually get a little bit of that, a little bit of a maker percentage for that. A liquidity provider, I believe, is a little bit of a. I'm not really sure if I'm using the right terms here, but you're providing liquidity and you get a little bit of money for that, and actually that interest rate can go up to 8% per year or something, or 10%. It depends, and maybe this one is one of those. But also, what liquid staking means is then, for example, if you stake your Ethereum, at the same time you can also trade with it still, with certain coins, and maybe this is one of those coins. And if you can still you can still trade with it, and for example make money in that way, then basically you can stake it, so you definitely get your interest on it, but at the same time you can still use it to trade on, for example, Lido staked Ether or something. I believe it's something like that, but that's definitely what liquid staking is, and I believe it's a liquid staking token. So I can just click on it, and then you get all these tokens that you can stake. And actually, Lido staked Ether is now very big. There are only 3 of them above 1 billion. So I believe this is the biggest one that people are just basically going between Ethereum and Lido staked Ether. So just going back and forth, and because they really like the idea of these liquidity staking, they're actually going a lot in there, which is very cool. This is one of these smart contracts on Ethereum actually, which is very, very nice. Now here you can actually see like liquid staking token coins. The biggest gainer, for example, it's not very big. Market capitalization is now in the 41 billion, which is actually a lot. It's a lot of money still. So yeah, I get it. We can read more about it here. This sounds very interesting, to be honest. Liquidity for stake tokens. You can actually stake now, it says here, which is very fun to see. How Lido works. Stake any amount of your tokens to access daily staking rewards. Receive liquid ST tokens and start receiving rewards immediately. Use your ST tokens across DeFi to get more reward opportunities to your daily staked rewards. Lido DAO. The Lido DAO is decentralized autonomous organization to decide. Okay, yeah, I get that. So the Lido ecosystem is basically the apps which use Lido, or within Lido, basically. So you have Aave, which is a very commonplace, or MetaMask, or Uniswap, or 1inch, or Ledger. There's just the basic, the biggest websites for swap tokens and that kind of things, like DeFi. They're all decentralized finance apps. So yeah, you can go on to like the networks that they use, Matic, Polygon, or Ethereum. And basically what this is just you can stake them in there. They're very happy if you put your money in there, and you can still swap stuff and do stuff with it. So yeah, and even if you do trades with certain things, you get more rewards, and these rewards can actually go up a lot, I believe. So for example, you now see you can stake Ethereum or Matic, and then you can buy and trade between this one. And I believe you can restake them sort of into this one, which is actually giving you more rewards. I'm very interested, actually. I might go into more depth in my own time. But for example, the idea is very interesting. People are definitely interested if you go on like the 7 day. As you can see, it's gone up a lot from like 2,900 up to 3,200, which is like $400 gain, which is like, how much is that? A $400 gain is like 17% or something like that. I don't know. I would say. Okay, so it's the 7 day. It's 8.4% because that's from this part. But still, it's a lot. It's gone up a lot in a year. It's gone up a reasonable amount in a month. So yeah, I like the idea. I might even do some staking myself because that's something that I haven't explored myself yet. But yeah, that way I can actually find my cryptocurrencies that I'm very interested in. Yeah, in putting my money into, because I like the ideas. I am investing in the ideas. Might be a hype, but this does really look like a good coin. And for example, Binance coin, which is basically this one, I've used this before, and it has been growing ever since. Like, well, not ever since, but at the beginning. Oh, this is a year. Sorry. Oh, it made a big crash actually. Oh, that was the Bitcoin crash, of course. If you put this against Bitcoin, then I can even do that. By the way, I can just do that. BNB BTC, I believe. For example, this one. I believe this is a very good. Oh. That doesn't look good. It does make like a little bit of an upward wedge over there, which is, I don't know. I don't know if it's a good thing or not. Oh wait, this is on the 4 hour still. Okay, let me go like this. Ah, well, there we go. Okay, so it's been stable for a while now. And it's very interesting to see. You see this? Boom, boom, boom. This is actually maybe some Bitcoin halving magic that you can see. Maybe that's the Bitcoin halving magic that you see. Because the Binance coin is of course related to Binance. It's also basically a sort of a stock for Binance. Oh, not that one. So yeah, I invested in that a lot, but Binance was then it became illegal in I believe in the whole of Europe, but mainly in the Netherlands actually. So I cannot use Binance anymore. I'm now using Bybit. I'm not making any. Oh, look at my background. I love my background. Yeah, I'm now using Bybit. I'm not making any advertisement for them, but like I just use it. So yeah, I don't know about this anymore. But it was like decentralized finance at the beginning basically, and now you have this Ripple. I still have no clue actually what to think of it because I've been ripped off my money a lot of times with with them. But yeah, anyways, that's that way. I'm actually choosing my cryptocurrencies right now. My portfolio is not big enough to, like, put it in different things and, well, basically spread my risk. But I might be able to soon to spread my risk and actually get like not the whole time like the 30% gains that I anticipated, but more like 5% there, and then whenever I want on the other, can also put like 5% there, and then I can just go back and forth and make like every time I get like 3 or 5% from both of them or something. So, but I'll look into that, of course. I right now I'm just doing full in, full out on any on Solana basically, and trying to grab my money. And if I'm very happy with how I'm doing on the long term, then I might not even change that. Maybe just change the coin, but that's it. Here, this is for example what you can see 0.9998. That has to do with different markets actually, and of course the update time. So yeah, that was something that I wanted to show, and welcome back to my background. Yeah, you can also compare markets, and that's what I already showed you a little bit. For example, I said, well, yeah, for example, go to Ripple. Look at this. I did a little bit of looking into that already in a lot of video that I didn't upload. But this is Ripple against USD Tether. It's gone up a lot and then gone down a lot and again up, then gone up a lot and then gone down a lot. And now it's going up again. It's very unstable on a long range of dates. But it's now actually, yeah, it's going up and down, up and down. That also has to do a little bit with Bitcoin, of course. But because Bitcoin, of course, in 2021 made their biggest rally up. And this is the other rally down. This is the 2018 rally when it went up all the way to 20k, and then Ripple went with it, of course, and this is the same rally, and then of course Ripple went with it as well because the total market capitalization of cryptocurrencies in general went up. So every coin was getting bought more. But then if you can put it against Bitcoin, which I can with by just typing it over here, so Ripple Bitcoin. Why is it not on there? Anyways, you can actually see what it did in general. Yes, so I can go back way further because Ripple is like from 2014 even. And I don't know what happened over here, and I don't want to know. This is insane. It went down to basically zero. Anyways, You can see that it's been stable for a long time. So you have 2021 over here, which made it really unstable. Um, okay, let's go over here. Do we have a logarithm scale? No, we have. Oh, what happened? Anyways, yeah, this made it very unstable. This is one of the saddest moments of my life, by the way. This is a February. No, I don't know anymore, actually. Yeah, here it was. This moment was a sad moment in my life. So it went down a lot, because Ripple got a bad rep in media with some, I don't know, I think they even had some lawsuits. And then again, everyone was like, okay, this is very sad for Ripple. We have to buy Ripple. All of us have to buy Ripple at February 1st. And yeah, then you have to buy the rumor, sell the news. And as you can see, this was 30th of January. So people were buying already like a couple days before. And then it was February 1st. Bam, it went up, of course. But bam, it went down again. And then by a lot, because this was 1500 Satoshis here. And then it became 1,000 Satoshis, which is basically a 30% drop. And Bitcoin also did a little bit of dropping at that day, I believe, which is basically giving me like a 40% drop in my money. And even, yeah, I believe I went in here or something. Then it went up and then it went down over here. But then I didn't sell my money. I actually waited until here, bought more of it because I didn't put all my money in there. I only put 150 in there instead of, I believe I had like 900. And then it went up to here and I actually made money at the end because this gap from 950 to 1300, I had like then $350 of Ripple and I went up and then yeah, in total I made a little bit of money there. But yeah, you can see it had a big impact. But in the end, it did go up, and I believe I got this rally. That's why it was also marked out. I believe I got in here somewhere and got out there, and then I made a lot of money, but I didn't put in all my money. Anyways, oh my god, why is it doing this? This is so weird and annoying and scary. Can it not do this? Can it just... Why is it doing this? Okay, I don't want to get rid of it, but I have to, I believe. Yeah, I have to. Okay, so did I put in favorites? No, of course not. So, MACD. I believe I had... Which one I had? Yeah, I had this one. It did something weird. Anyways, you can now see that it's been going pretty in this channel. This channel has been made, well, around this time actually. It's already like 3 years old and you can see it went down, boom, and it went up, and down, boom, and it went up. And I don't know what happened every time, but now it actually went down way further. So I'm not really feeling Ripple anymore, but they still have a lot of money in there. So people are just trading it. And I'm already almost at an hour. So there you go. You have your hour special at the 5th episode already. So yeah, I guess this is just how you have to choose yourself, of course. I just like Solana a lot. It is pretty stable. It's now more unstable, but it's very interesting because it's a very very nice slope, and it can actually go up to 140, which I'm hoping. Like, it has already been this high. And it is actually trying to go to there, but it's been stopped by this smaller peak. So I'm feeling that it wants to go up to here, and then it is going down. So, like, to here again. It's gonna be in this channel. I don't know. We're gonna see. It might make a rally up to 260. We'll never see. But as I said, I do believe in the idea of Solana. And they're actually very in front of what they were doing at the time. They were very new in that sense, and now they're actually big in the new section of crypto, like the decentralized finance stuff. But anyways, I'm gonna wrap this up. So I hope you enjoyed. I hope you learned something. If you have anything to remark on my videos, please put it in the comments. And I hope to see you in my next video. Please leave a like and share and comment to give me more interaction and that it gets promoted in the YouTube algorithm or something. I don't know. And I guess I see you later. or as I like to say, good morning, good afternoon, good evening, or good night.